Worries about debt in Europe are causing a drag on U.S. stocks. In Money Tuesday, why those problems cause concern here. Financial planner Stewart Welch with us about that and a few other investment ideas out there. It's good to see you today. Thanks so much for being with us.
Good morning, Rick.
I wanted to start with this because we woke up Monday morning, look and say, expect a rough day on Wall Street because Greece looks like it's on the verge of a default on its debt. Later in the day, though, suddenly you see Financial Times reports that China's talking about investing strategically in Italy. And that rallied Wall Street here in the U.S. And people responded. And a lot of folks say, why in the world should I worry about what's happening in Europe when I'm worried about my pocketbook here? What's going on with the stock market?
Well, there's certainly some truth to that. But, I mean, you know, we live in a global community. And particularly from an investor perspective, a lot of the companies here have major investments in foreign countries, have major sales in foreign countries. And so everything is interconnected. If there's a major problem over there, I think they're worried about a Lehman Brothers kind of default. When you talk about in Greece and in Europe, and that would definitely have a ripple effect over here in the United States, particularly to the stock market.
And when you talk about U.S. banks and the U.S. investment firms, they're still trying to teeter along following what happened in 2008 here. If you had something like that happen in Europe, they are going to feel something, feel some pain for that.
They will definitely feel that, and they are not out of the woods yet. They still have a lot of bad loans that they're trying to work their way through. Okay,
as we talk about the economy and you know, what you call a slack-tide economy right now, and everything's just kind of flat at this particular moment. You were looking at some of the best ideas for investing if you are dipping into the stock market right now. You say that blue chip stocks are
you know, and I think, Rick, your money has to be somewhere, and it's either going to be in fixed income or it's going to be in equities. It's going to be in bonds or it's going to be in stocks. And when you look at the bond side, there's just no opportunity. You've got money markets paying under 0.5%. You've got the 10-year Treasury paying 2%. You know, there's just nowhere to go. If you move over to the equity side, what I really like are blue chip dividend paying stocks. So for example, for our retirement clients, we put together a portfolio of 30 stocks. It's yielding about 4%, and it's yielding 4% dividends, which are not taxed as high as interest is. And so you've got, I think, a tremendous opportunity there to get paid while you wait for all of this mess to sort itself out.
So you said when you look at those numbers, there are strong balance sheets out there. There's a number of issues out there that point to this is encouraging to go that direction.
Well, I think of the baby boomers. So you've got 80 million people, and the leading edge of that is just beginning to retire. And as those people retire, what are they going to be looking for? They're going to be looking for income. And, you know, where are they going to get that cash flow? And they're going to be looking for some conservative growth. And I think that draws a bullseye on blue chip stocks.
Hey, it's good to see you, Stuart. Always good to talk to you.
Thanks
so much. More to come on Good Day Alabama. Allergy season for your pets. We're going to get